You know that feeling when you close a trade and immediately wonder if you made the right decision? Your heart's racing, your palms are sweating, and you're already second-guessing yourself before the market even moves. But what if I told you that the most successful traders don't feel that way anymore? They've crossed an invisible line that separates struggling traders from profitable ones. And today I'm going to show you exactly what happens when you make that transformation. These aren't just theoretical concepts or motivational fluff. These are real, tangible shifts that happen in your psychology, your behavior, and your bank account. By the end of this, you'll know exactly where you stand and what needs to change. Let's talk about something nobody wants to admit. Most traders lose money. The statistics are brutal, and they don't lie. Depending on which study you look at, somewhere between 70 and 90% of retail traders end up losing their capital. That's not meant to discourage you, but it's the reality we need to face head on. The good news? The traders who do make it to the other side share remarkably similar characteristics. They've all experienced the same fundamental shifts in how they approach the markets, and once you understand these shifts, you can deliberately cultivate them in your own trading. The first major sign that you're transitioning into profitability is that your emotional response to individual trades completely changes. Think about when you first started trading. Every single position felt like life or death. You'd enter a trade and immediately start watching it tick by tick, your mood swinging wildly with every price movement. A $50 gain felt like winning the lottery. A $50 loss felt like personal failure. Your entire sense of self-worth became wrapped up in whether that one trade worked out or not. This is completely normal for beginners, but it's also completely unsustainable. Profitable traders have fundamentally rewired their relationship with individual trades. They understand something that took me years to grasp. Any single trade is essentially meaningless. What matters is the statistical edge over hundreds or thousands of trades. When you truly internalize this, your entire demeanor changes. You can enter a position and walk away from your screen. You can take a loss without it ruining your day or making you question your entire strategy. This doesn't mean you stop caring. It means you care about the right things. You care about executing your process correctly, not about whether this particular trade wins or loses. I remember the exact moment this clicked for me. I was about 2 years into my trading journey, and I had just taken 3 losses in a row. Historically, this would have sent me into a spiral of self-doubt and revenge trading, but something was different this time. I reviewed each trade, confirmed I had followed my rules perfectly, and simply moved on to looking for the next setup. There was no emotional charge. I felt the same way a shopkeeper feels when one customer leaves without buying anything. Slightly disappointed, maybe, but completely understanding that not every opportunity converts. That's when I knew something had shifted internally. This emotional neutrality extends beyond just handling losses. Profitable traders also don't get overly excited about wins. That might sound strange, but excessive celebration after a winning trade is actually a red flag. It means you're still treating trading like gambling, where each win is a separate event to get excited about. Professional traders view winning trades as simply their system doing what it's supposed to do. The edge playing out as expected. Nothing more, nothing less. The second unmistakable sign of becoming profitable is that you stop changing your strategy every other week. Be honest with yourself. How many different trading systems have you tried? How many indicators have you added and removed from your charts? How many times have you completely overhauled your approach because you saw someone on social media posting screenshots of their wins? If you're still in the unprofitable phase, the answer is probably a lot. Here's what happens when you're not yet profitable. You blame your strategy for your losses. You convince yourself that if you just found the perfect system, the perfect indicator combination, the perfect entry signal, then everything would click into place. So you spend your time backtesting new ideas, watching YouTube videos about the latest trading techniques, and constantly tweaking your approach. The problem is that you're switching strategies before you've given any single approach enough time to prove itself statistically. Profitable traders do the complete opposite. They've found a methodology that has a genuine edge, they've tested it thoroughly, and now they simply execute it repeatedly with discipline. They might make small refinements over time based on data, but they're not fundamentally changing their approach every month. They understand that consistency and execution is what allows statistical edges to manifest over time. Think about it this way. If you have a trading system that wins 55% of the time, you might still see 5 or even 10 losses in a row just due to random distribution. If you abandon that system after a losing streak, you never give it the opportunity to play out its edge over a large sample size. Profitable traders have the patience and confidence to stick with their methodology through the inevitable rough patches because they've done the work to verify that their edge is real. I spent my first 18 months as a trader jumping from strategy to strategy. Breakout trading, mean reversion, trend following, option strategies, you name it. I tried it all. My results were mediocre at best because I never stuck with anything long enough to develop genuine expertise. weeks. It wasn't until I committed to a single approach for 6 months minimum that I started seeing consistent results. That commitment forced me to stop blaming the strategy and start examining my execution, my psychology, and my risk management. That's where the real growth happened. The third clear indicator that you're becoming profitable is how you think about risk and position sizing. Beginners and struggling traders focus almost exclusively on how much they can make. They're calculating potential profits before they enter a trade, fantasizing about what they'll do with the money, and sizing their positions based on how much they want to win. This is backwards, and it's why most traders blow up their accounts. Profitable traders are obsessed with risk first and returns second. Before they even consider entering a position, they know exactly how much they're willing to lose. They've calculated their position size based on their risk parameters, not on how much they want to make. They think in terms of risk-reward ratios, and they refuse to take trades that don't meet their minimum criteria. This might sound simple, but it represents a complete inversion of how most people approach trading. Let me give you a concrete example. A struggling trader sees a setup and thinks, I want to make $1,000 on this trade, so I'll buy this many shares. A profitable trader sees the same setup and thinks, I'm willing to risk $200 on this trade based on my account size and risk rules, so given where my stop loss needs to be, I can only buy this many shares. See the difference? The profitable trader's position size is determined by risk management, not by profit targets. This shift also manifests in how traders handle drawdowns. Everyone experiences losing periods. The market doesn't care about your bills or your financial goals. There will be times when your strategy simply isn't working in current market conditions. Profitable traders accept this reality and have predetermined rules for how they'll respond. They might reduce position size during drawdown periods. They might take a break to reassess. What they don't do is increase their position sizes to try to make back their losses faster. That's the kiss of death. I learned this lesson the hard way, like most traders do. Early in my journey, I had a particularly rough month and found myself down about 15%. Instead of accepting it and sticking to my plan, I decided I needed to make it back quickly. I doubled my position sizes, started taking marginal setups I would normally skip, and within 2 weeks I had turned a 15% drawdown into a 35% disaster. That experience taught me more about risk management than any book ever could. Now, my risk per trade actually decreases when I'm in a drawdown, not increases. It's counterintuitive, but it works. The fourth sign you're becoming profitable is that you develop an almost boring level of routine and discipline. Trading is not exciting when you're doing it right. I know that's not what you want to hear. The marketing and the movies make it look thrilling and action-packed, but real profitable trading is actually quite mundane. You do the same thing every day. You follow the same process. You make the same types of decisions based on the same criteria. Profitable traders have detailed trading plans and they follow them religiously. They have checklists they go through before entering every trade. They have specific times when they review their performance. They have rules about when they trade and when they don't. This level of systematization removes emotion and discretion from the equation. You're not making it up as you go along. You're executing a proven process. This also means you stop over trading. One of the clearest differences between profitable and unprofitable traders is trade frequency. Beginners feel like they need to be in the market constantly. They're terrified of missing out on moves. They convince themselves that more trades equal more opportunity. Profitable traders understand that quality beats quantity every single time. They wait patiently for their specific setups, and they're perfectly comfortable sitting in cash when conditions aren't right. I track all my trades in a detailed journal, and when I review my data, the pattern is crystal clear. My best months are not the ones where I took the most trades. They're the months where I took the fewest trades but executed them with the highest precision. My worst months are always characterized by overtrading, taking marginal setups, and deviating from my plan. The data doesn't lie. Discipline and selectivity are directly correlated with profitability. Think about professional poker players. They fold the vast majority of hands dealt to them. They're not playing every hand because they're bored or because they feel like they need to be in action. They wait for favorable situations where they have an edge, and then they bet accordingly. Trading is exactly the same. Most market conditions are not ideal for your particular strategy. Most price movements are just noise. Profitable traders have the patience to wait for their pitch and the discipline to swing hard when it comes. The fifth and perhaps most important sign that you're becoming profitable is that you view trading as a business, not as entertainment or a way to get rich quick. This shift in perspective changes everything. When you treat trading like a business, you invest in your education, you maintain detailed records, you analyze your performance metrics, you have a business plan, you think about risk-adjusted returns and capital preservation. You understand that slow and steady compounds into significant wealth over time. Unprofitable traders treat trading like a hobby or like gambling. They don't don't keep proper records. They don't review their trades systematically. They don't calculate their actual risk-adjusted returns. They focus on the excitement and the potential for big wins rather than on the unsexy fundamentals of risk management and consistent execution. This approach might be more fun in the short term, but it doesn't lead to sustainable profitability. When you adopt a business mindset, you also become willing to invest in yourself properly. You'll pay for quality education, for tools that improve your efficiency, for mentorship from traders who are where you want to be. You stop looking for free everything and start understanding that building a real trading business requires investment, just like any other business. You also start thinking about taxes, about entity structure, about how trading fits into your broader financial plan. These aren't exciting topics, but they matter enormously. Profitable traders also understand their metrics intimately. They don't just know whether they made or lost money last month. They know their win rate, their average winner versus average loser, their maximum drawdown, their profit factor, their expectancy per trade. They track these numbers religiously, and they use them to make informed decisions about their trading. If you can't rattle off your key performance metrics right now, you're not yet treating trading like a business. Here's something else that changes when you cross over into profitability. You stop caring what other people think about your trades. Social media is full of traders posting their wins and staying silent about their losses. It creates a completely distorted picture of what trading actually looks like. When you're struggling, it's easy to compare yourself to these highlight reels and feel inadequate. When you become profitable, you realize that none of it matters. The only opinion that counts is what the market says about your actual results over time. You also stop seeking validation from others. You don't need someone else to confirm that your trade setup is good. You've done your analysis, you've checked it against your criteria, and if it meets your standards, you take it. If it doesn't, you pass. Simple as that. This independence of thought is liberating, and it's essential for long-term success. The market doesn't care about consensus. Some of the best trades feel uncomfortable precisely because they go against the crowd. Another subtle but important change is how you handle technology and information. Profitable traders have streamlined their information intake. They're not watching 8 different financial news channels, reading 20 newsletters, and monitoring 50 different indicators. They've identified the specific information sources that are relevant to their strategy, and they ignore the rest. This reduces noise and helps them stay focused on what actually matters for their decision-making process. In contrast, struggling traders often suffer from information overload. They're constantly consuming content, looking for that one piece of information that will give them an edge, but mostly they're just confusing themselves and creating analysis paralysis. More information does not equal better decisions. In fact, beyond a certain point, more information usually leads to worse decisions because you're trying to process too many variables. Let's talk about something that doesn't get discussed enough. Profitable traders have made peace with the inherent uncertainty of markets. They've accepted that they cannot predict the future, they cannot control what the market does, and they will never achieve perfection. This acceptance is incredibly powerful because it removes the psychological burden of trying to be right all the time. You don't need to be right all the time. You just need your wins to be bigger than your losses, and you need to execute your edge consistently. Unprofitable traders are still fighting this reality. They're still looking for certainty in an uncertain environment. They want guarantees that don't exist. They're frustrated when the market doesn't do what they expected, as if the market somehow owes them something. This mindset creates constant psychological friction and stress. Profitable traders have eliminated this friction by accepting uncertainty as a feature of trading, not a bug. The relationship with money also transforms. This is going to sound paradoxical, but profitable traders care less about the money than struggling traders do. They're not trading because they desperately need to make rent next month. They're not calculating how many winning trades they need to buy that new car. They're trading because they enjoy the intellectual challenge, they've built a system that works, and the profits are simply a byproduct of executing that system well. The money is a scorecard, not the motivation. When you're trading from a place of financial desperation, you make terrible decisions. You take trades you shouldn't take because you need them to work. You risk too much because you need to make a certain amount. You exit winners too early because you're scared of giving back profits you're already mentally spending. All of this sabotages your results. Profitable traders have either built up enough capital or have other income sources such that they can trade without emotional attachment to each dollar won or lost. Here's a question that reveals a lot about where you are in your trading journey. When you think about trading, is your primary emotion excitement or is it calm confidence? If it's excitement, you're probably still treating it like entertainment. If it's calm confidence, you're probably on the path to consistency. The best traders I know describe their daily trading as relatively boring. They're executing the same process they've executed hundreds of times before. There's no drama, no emotional roller coaster, just methodical execution. Something else that happens happens as you become profitable is that your time horizon extends. Beginners think in terms of days or weeks. They want to see results immediately. Profitable traders think in terms of months, quarters, and years. They understand that trading success is measured over long periods, not short bursts. They're comfortable with the fact that any given month might be flat or even negative, as long as the long-term trajectory is positive. This longer time horizon also affects how they approach learning and improvement. They're not looking for quick fixes. They're committed to continuous incremental improvement over years. They read extensively, they study their past trades, they work on their psychology, they refine their risk management. This never stops. Even traders who have been profitable for decades continue to work on their craft because markets evolve and so must traders. The final thing I want to address is the role of losses in your psychology. Profitable traders have completely reframed what a loss means. It's not a failure. It's not a reflection of their intelligence or worth. It's simply the cost of doing business. Every business has expenses, and in trading, losses are an unavoidable expense. What matters is that your overall business is profitable, not that every individual transaction makes money. When you can take a loss and feel nothing more than mild disappointment, the same way you'd feel if your favorite coffee shop was closed when you wanted a coffee, you've achieved emotional mastery. That's the goal. Not to eliminate losses, that's impossible, but to eliminate the emotional charge associated with them. They're just data points that help you refine your approach. So where do you stand? As you've been listening to this, you've probably recognized yourself in some of these descriptions. Maybe you're already exhibiting some signs of profitable trading but struggling in other areas. That's completely normal. This is a journey, not a destination. The key is honest self-assessment and a commitment to continuous improvement. If you're still experiencing high emotional volatility around individual trades, that's your primary area to work on. Start with position sizing. Trades small enough that individual losses don't hurt. Practice taking losses and moving on immediately without rumination. Over time, this will rewire your emotional response. If you're still jumping between strategies, pick one approach and commit to it for at least 6 months of focused practice. Document everything. Track your results. Give the statistical edge time to manifest. You can't evaluate a strategy properly over 20 trades. You need hundreds of samples. If you're not yet thinking about risk first, start now. Before every trade, calculate exactly how much you're risking. Make sure it aligns with your overall risk management rules. Never compromise on this. Risk management is what allows you to survive long enough to become consistently profitable. The transition from losing trader to profitable trader isn't mysterious. It's not about finding some secret indicator or having access to privileged information. It's about making these fundamental shifts in how you think about trading, how you manage risk, how you handle your emotions, and how you execute your process. Every single profitable trader has made these same shifts. You can too. The beautiful thing is that these changes compound. As you develop emotional control, you execute your strategy more consistently. As you execute consistently, you start seeing results. As you see results, your confidence grows. As your confidence grows, your discipline improves. It's a positive feedback loop that accelerates your progress. Remember that profitability in trading is not a destination you reach and then you're done. It's a state you maintain through continuous discipline and execution. Markets change, and you need to keep adapting while staying true to your core principles. The traders who last decades in this business are the ones who never stop learning, never stop refining, and never lose respect for the risk inherent in markets. Your trading journey is unique to you, but the principles of success are universal. Focus on process over outcomes. Prioritize risk management above profit targets. Develop emotional neutrality. Build sustainable habits and routines. Treat trading like the serious business it is. Do these things consistently, and profitability will follow as surely as day follows night.